Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Hey, Mark, happy to be back. I've been around the world, and now I'm back here with you and the Digital Currents audience. How are you?
Doing great. Welcome back. The dynamic duo back. Although we're a little off sync, and you're wearing red. There's blood in the streets. I got the red walls behind me. I'm all in black today, literally head to toe. It's unlikely we'll record next Friday on Black Friday. I guess we could, but probably we won't. We're early Black Friday. So I got black from head to toe. And I even have the black socks with the rest in peace Bitcoin. Why? Well, today is a Black Friday. Bitcoin went way on sale. Like if you were a doorbuster and you got up early, you could have got it for $80,500. Now remember, this is an asset that was $105,000, a month ago. So something's definitely going on. We can talk about that, but it's interesting. And the headstone on my sock is from 2018. So the socks are old. And people have been saying Bitcoin's dead for even longer than 2018. There's actually a website that tracks it. We're up to close to 500 major articles, FT, Wall Street Journal, et cetera, claiming that Bitcoin's dead since 2009 and still not dead, not going to be dead. And the same thing's true today. So Black Friday, whatever, people are afraid, people are scared. There's somebody getting liquidated every morning for the last 6 or 7 days between 9:30 and 10. There's been a relentless sell pressure. Some say Grayscale's getting, some say it's Wintermute. I mean, there's a lot of rumors. Somebody's getting liquidated. And now, the big story this morning is, they're basically going to execute Saylor, not physically, but they're going to kick him out. They're going to kick Strategy out of all the indices on January 15th. It looks like they probably are. Who are they? Well, the power brokers. But that certainly will be bad in the short term for that stock. Will it be bad for Bitcoin? No, he's not going to sell the Bitcoin. And so I think we're just in this place, and we've been talking about it for the last few weeks, which I didn't want to be right. Like, I'm not celebrating the fact that the 4-year cycle is still alive and well, and that we're in crypto winter. That's not, it's not like a good thing, but it's, Howard Marks has this great line: you can't predict, but you can prepare. So, I'm not good at predicting, but I'm willing to hedge when appropriate. I'm willing to, step to the side if things start to go against. So anyway, lots of stuff there to unpack, but.
Yeah, Mark, it looks like I was just gone too long. I try to come back with a little bit of Thanksgiving cheer. And we always comment about this, right? So I got a little bit of that cranberry color, but the idea here is that around Thanksgiving, you have multiple generations gathering around a dinner table. Imagine that, a bygone era. And there's ideas that are flowing, and capital then flows, as you mentioned, on Black Friday. Yeah. So, we predicted this, Mark. I know that you're not one for self-aggrandizement, so allow me to be the one to say we predicted this many, many weeks ago. We actually called when winter started, check notes. And then now, the question is, okay, if we are bound to have history repeat itself with the cycle, what happens? And how low do we go? And, why is this happening? I think some of those are big questions, which they're going to take a lot of weeks for us to digest. But really the idea is, kind of what is happening in real time, right? So we are now at a pattern that hasn't been this low since April. And as you mentioned, things are on discount. not just with Bitcoin, but take a look at ETH, Mark.
Oh,
Oof,
man.
talk about the risk off on asset. That one has really been sort of
and
now.
X. I've been having this. He probably doesn't watch the show, but I've been having this banter. It's not a fight. It's not but with this guy Nomad, and he's an ETH head, and at first he was just like, you with your boomer techno, or your what do you call it, boomer. He had a for BTC, Boomer something coin, Boomer Trust coin, Boomer something coin, and and Boomer Technology coin. That was it, Boomer Technology coin. And he's like, you guys are like, I'm one of the least, not popular, but one of the least frequent users of Bitcoin. Like, it's not my age group and above, us boomers. There are a few of us OMGs, but it's mostly young people. Nomad, but okay, but he's calling it Boomer Technology because he says it's not going to be the future of money like y'all think it is. It's basically going to get replaced by ETH. And I'm like, you do notice that they both go up and down together, like almost in perfect sync. I mean, over the last month, Bitcoin's down 21, ETH's down 23, and it's almost a perfect line. But that aside, he did make some points about ZK Snarks, which, our venture partner, Scott Stornetta, who probably's forgotten more about that than this guy knows. I'm not saying he's not good. He may be very well good. But I do think ZK technology is going to be a big part of the future fabric of the financial system. I just think we're never going to be base layer on a proof of stake network. I just don't. I think we'll be on a proof of work network. So anyway,
kind of come to your defense, because I know you're not one to engage in battle. So allow me to be the blocking and tackling. For those listeners, Mark loves Bitcoin, yes, but he also loves all digital asset technology that has a purpose, right? So I think that's the really critical piece, the purpose. And why do we malign some coins in this show? Because to the current moment, if we're talking about something like Elon coin, or excuse me, Dogecoin. Why do we make fun of it? Because, it's yet to have a purpose. Could it have a purpose into the future? It's possible, but right now we haven't seen it.
Anything's possible. And X, you're right. We are technology maxis. We're not Bitcoin maxis. We're not ETH heads. We're technology maxis. And I had actually a quite civil, for the first time, conversation with someone from the XRP army yesterday. And, he's like, why are you so hostile against XRP? I said, I'm actually not. I don't hate it. I've been doing this now almost 8 years as a venture capitalist in the digital space. And we've looked at hundreds, probably coming up on 1,000 plus companies. And we've invested in over 100. And I've actually never seen one team come in saying, yep, we're building on XRP. Not one. And I did give him, I said, nor ADA, nor Cardano. So it's not that I hate those two coins. It's just mathematically, we should have seen someone proposing to build something on one of those two chains. And just haven't. And, the big one was, I guess, yesterday, maybe the day before, the JP Morgan, is it JP? It doesn't matter. One of the big banks announced that they were implementing on Chainlink, whatever it was, whatever program, that the XRP army had said they were going to get, because Brad said that was going to happen. Brad says that a lot, actually. He says stuff that just, it's like, I don't really understand, particularly in this day and age, if you say something that's provably false, why? Like, because people will get the receipts and they will prove it to be false. So I don't really understand that. I mean, you can have an opinion, that's fine. That's not provably false. You may be wrong, you may be right. But when you state something that's provably false and someone disproves it, that just doesn't, that's not a good look.
No doubt. we'll kind of peel the onion a little bit, Mark, and maybe get some of the thoughts about maybe why we're in a little bit of a dip. And we always say the best way to kind of understand where we're going is to understand where we've been. So, why have we dipped so much in a relatively short amount of time? And I think if you zoom out, it's not just crypto and Bitcoin that's down, it's everything that's down, right? So this idea that, Bitcoin tends to lately be a reflection of like greed and the fear index. And overall, what does that mean for other assets like AI? Well, that has been also a very choppy bit of news, right? So there was all these fears resurfacing about a bubble in AI. And when I was in the Middle East and Asia, I kind of described it this way, Mark, with the bubble fears around the internet in 99 and 2000. Well, the bubble eventually burst, right? And all that really means is that a couple of companies go bust, but then the watermark raises because now everybody is online or web native. Same thing, I think, with the idea for AI. Well, is the AI bubble going to burst? Absolutely. There are going to be some companies that are just not going to do well, not going to be able to support the valuations. But then everybody is going to ingest AI in a more native fashion. And now you're going to have to do other innovative things like sell your products, goods, or services online as you did in the 99s and 2000s, but now using AI as a way to get smarter about that, not just AI for AI's sake. And maybe, those same sets of investors have kind of continued this kind of fear mongering with our digital assets. And, when you're kind of seeing some of this is the part, Mark, where you and I, we don't really spar, but we have some colored opinions on how much the macro environment impacts Bitcoin. So
sure,
let's take a look at some of the job numbers. Stronger than expected growth, although we can always look at these numbers as being weird, right? 119,000 forecasted at 50,000. Is that good? You can kind of read into that, but that kind of allows people to begin to bet what is going to happen with rates into the future, right? So now the rate cut probabilities, I think, stand at like 40%.
Yeah.
Bitcoin reacts very heavily to that, Mark. So what say you about some of these macro factors in Bitcoin pricing?
Yeah. So they're all, to your point, they're all interconnected. I mean,
yeah,
Bitcoin is a macro asset in the sense that it is a commodity like gold. It's a thing, 1 ounce of gold equals 1 ounce of gold. 1 Bitcoin is 1 Bitcoin. It's a unit of account. It's a store of value, but it's also a currency. And, it's money in the sense that it's an asset that exists in the absence of a liability. And so when you think about all the other interrelated macro factors, they're certainly going to have an impact on money, right? If I have less money because the value of my other assets went down, I'm going to put less out to work in the monetary system, and GDP is going to fall, and activity is going to fall, and therefore money supply doesn't need to grow as much, and therefore the unit of account probably doesn't rise as much. So that's part of it. The other part of it is the interconnection between traditional markets, which had been on this tear, right? I mean, just, the Mag 7 and the Fab, the Super 2 and the Fab 5 and whatever. But the tech companies, particularly the AI enabled tech companies, were on this ascendance. And where you were in the Middle East, the Saudis are committing $1 trillion to invest in the US in theory. We'll see if that actually happens. It's like, Masa-san said he was going to put 500 billion in, and now he probably isn't because his stock opened down 14% this morning and he doesn't have the money. So he's probably, and no one will call him on it, which is kind of funny. But Trump had his announcement day. So yeah, all this stuff is interconnected in the sense that why were the stocks going up? Well, part of it was supply and demand, and people were buying in anticipation of rising earnings, and earnings did rise in a few companies, not all companies, in a few companies, big companies, not the small companies. 42% of small caps don't make any money. It's kind of crazy. So there's definitely this K-shaped economy that people have heard about. The rich are getting richer, and the haves are getting more havier, and the have-nots are getting more naughtier. And But the issue there is there was leverage, and there was a lot of leverage. And now we're finding out some of that leverage was off balance sheet, which, that was 2001. And companies like Enron and WorldCom and had all these special purpose vehicles. And now we're seeing that Oracle, like, your old stomping grounds. Oracle went like this on the announcement and like this. And now it has a negative $74 billion accretion. That's bad. That's bad. And it turns out Uncle Larry is over levered, shall we say, at 500% debt to equity, which that's usually bad for corporations, just generally speaking. And I'm not saying they're going to go bankrupt, but 500% is bad. So the delevering causes margin calls. And everyone's seen the meme, the girl looking at the guy's phone, who is Margin and why does she keep calling? And so people are getting margin called. And when you get a margin call, you don't sell what you want to sell because those assets have declined. You sell what you can sell. So some of that is Bitcoin, some of it's gold, some of it's bonds. And then there's one other little thing that we don't want to dive too far into, but most of capital markets for the last probably 40 years basically start in Japan, right? Everything starts in Japan. So post the collapse of Japan in 1979, they went into basically a ZERP world. Interest rates basically went to zero. And everyone in the world said, I can borrow money at zero and I can buy assets in my home country at 3, 4, 5, 6, 7%. Awesome. The Japanese carry trade was born, and it basically financed most, not all, but most of the massive increase in both GDP and debt over the last 40 years. Well, interest rates in Japan suddenly went the other way. I mean, literally like a spike, and went from basically 0.5% to 3.5%, 4%, and people started unwinding. The yen. Now, here's the crazy thing: Kuroda-san, who was my favorite central banker of all time. I mean, he was so jolly and happy, and man, he was the biggest wave rider, like the big kahuna of all central bankers in terms of money creation. He printed more money than all the other central banks put together. I mean, the Japanese money supply, he was the king. And he retired. And this new guy came in, Ueda-san, and he was like, no. I'm an academic. That's not what we do. And he said, I'm going to strengthen the yen. Okay, let's think about this. If you're going to strengthen the yen, what's going to happen to interest rates and what's going to happen to this massive debt, 260% debt to GDP, and what's going to happen to your economy, and what's going to happen to the global carry trade? He didn't really care about that. And so he says, we're going to do this. And the market said, wrong, because he did strengthen the yen for about 3 months. And the Japanese market collapsed, and people were unhappy because that's usually a strengthening yen means the carry trade is unwinding, which means there's global. And that was the February through April drop, right? And people blame Trump and tariffs, and that was certainly part of it. But a lot of it was Ueda-san tightening the ship. Oh man, in the last 5 weeks, the yen is like, everyone thought this was going to be Moonvember for Bitcoin. I don't know what we're going to call November, but it's one of the worst ever. I think it might be the worst November ever. But for the yen, it is Moonvember. I mean, the yen went from 142 to 158, 159. I mean, and so that that's to me the biggest story in the world right now is the unwind of the yen carry trade. And that is possibly at the root of whoever this big whale, it's not a whale, it's an institution, whether it's a fund, whether it's a pension fund, somebody got levered, probably levered Bitcoin, which never, levering an 80 vol asset, dangerous. Levering it a lot, very dangerous. And I think they're in liquidation. And that's why there's this relentless selling every morning.
Right.
Now, this too shall pass. And, maybe Ueda-san gets kicked out and they bring in a central banker. But here's the thing. What Japan needs is a weaker yen. That's the only way out for them. Because once you get super in debt, you can't pay it back. You can't restructure it. You can't default on it. So you just devalue your currency. And the problem is if they get too far ahead in the race to the bottom, then the euro and the dollar have to follow. And, it's so funny. I had this one, I won't call him a troll, but one guy, he's been after me saying, how can you root for the destruction of America? Like, what are you talking about? He's like, buying Bitcoin is rooting on the destruction. I said, no, I'm protecting myself from the central bankers and the politicians who have been trying to ruin, the country since 1913. But, and look, central banking is not our friend, never has been our friend. Ms. Lagarde's plans for a CBDC, which she says is a beacon of trust. Like, are you joking? It's a beacon of control. It's like a Klieg light. I mean, anyway, so.
Well, Mark, I think a lot of those points reminded me of some quotes. We have had our fair share of quotes flying around, and I'm curious about your take on this, because when I'm hearing the activity on the yen side, it kind of reminds me a touch of what's happening on BTC. So there's an idea here that kind of the sell-off was necessary to flush out all the leverage and kind of reset the crypto markets. And there's some evidence to that, right? Where you're seeing now strategy coming in with almost $1 billion buy, pumping money back into this. Also at the same time, where you saw about a $740 million short position being kind of taken out around the 80K level. So you have this idea that, kind of after months of levered perps trading, and we spoke about hyperliquid and how that kind of impacts prices. So this sell-off is kind of triggering not just like a return of a status quo, but really, this idea that the fundamental is still the same. There's a deleverage on the institutional players that are not exposed to leverage. They're likely to help lead the next kind of crop for even higher prices. Mark, what say you?
That is the analysis, right? Is what corrections do is normal, natural, and needed, right? And a lot of alliteration from Anxious Anchorman. If anyone's seen the movie Broadcast News from 100 years ago, but such a good movie, actually. But the reality is leverage causes dislocations from fair value. And that's been the case forever. But eventually, if you're a little bit above fair value, that's okay. If you get really far above fair value, gravity eventually takes over, and you got to cleanse the bad, because John Kenneth Galbraith called it the bezel, right, in the 1900s. And he said that in good times, people start to cheat. They adjust the accounting a little bit. Maybe they accelerate depreciation, which is going on a lot in the AI space. Maybe they recognize revenue a funky way, like stock option compensation is somehow revenue. Like that's an expense. I'm sorry, that's an expense, but whatever. Somehow it's become income for tech companies. So they start to fudge the numbers, and then maybe they trim. They do a little shrinkflation. Maybe you open up your chip bag and there's not as many chips, or And so they steal a little bit, and then they get caught. And then the regulators come in, and there's this cleanse. It's like a forest fire, right? You need them every now and then to clear out the underbrush and the weeds and the bad actors, because there are bad actors in every sector. They're bad actors. So anyway, that's my view on that.
I love it, Mark. And I think maybe a comment that we mentioned earlier about, some of the rationale about why we could be kind of dragged down due to some of the things that we're seeing in AI. There was a great quote by the CEO of Hugging Face. By the way, great name, Clem DeLangue. Okay, so that's one to remember. He said that we are not in a bubble, but the industry is experiencing an LLM bubble, driven by outsourced attention and investment in general purpose models like ChatGPT and Gemini. And so he actually had a pretty good kind of reflection here that kind of mirrors some of the thinking that we have come to have, where basically that compute heavy models to solve every problem is misguided. And instead, there'll be a shift towards smaller, cheaper domain specific models that enterprises can tailor to do, specific tasks like customer service without needing like all of the cataloging of the internet or everything that's ever been posted over time. And Mark, when I think about our energy concerns, when you mentioned innovation is not really being factored into the use of power in the grid, this kind of quote from Clem really kind of speaks to that shift.
It's such a great quote. And it's truly amazing how I call it the spreadsheetization of the world. So before spreadsheets, right? If you wanted to calculate something, it was hard, right? You had to write out the calculation, you had to use graph paper, and it took time and effort and human. And then the spreadsheet came along, and suddenly you punch a button and everything went up and to the right. Every forecast, every business, everything. I mean, we've looked at how many pitch decks, every company's future estimates look the same because they come from a spreadsheet. And so I think our brains got rewired a little bit that, well, we should just linearly or even exponentially extrapolate every trend. Well, that's illogical, but okay, so that's where we are. And so power usage, right? When Bitcoin started, they were like, oh my gosh, Bitcoin's going to use all the power in the world. Nope, because people started, because if it costs you, 3 cents a kilowatt hour to use coal, and then you can shift over to wind for 2.5, and then you can shift over to solar for 1.5, what are you going to do?
Right.
You're a business person. You're going to shift. And then you're going to go say, well, I could have negative cost of energy if I use trapped natural gas being flared and I put a turbine. Awesome. So people innovated. And the same thing now with the LLMs. Like, it's like, I don't, to your point, I don't need all of mankind's information when I say, how do I beat the final boss in this new game I just bought?
Yeah.
I really don't. I need very specific domain expertise. There's a Reddit channel who a bunch of people have said, this is how you beat the boss. And so pretty much all LLMs are is just regurgitating Reddit, which is kind of crazy. But I'm with you. And the big one was, so my son-in-law is a analyst. He works for an asset management firm, equity analyst. And, he used to build with spreadsheets, these 200-page, just unbelievable financial models. And now he's asking Gemini, and specifically Gemini, and I'll get to this in a second, to do it for him. And he says, it's actually quite good at it, and it's really fast. And so now I don't need an analyst. So this is bad for jobs. Now I don't need to hire an analyst. I don't need an intern because I got Gemini. Well, why is it important that it's Gemini? Could have been any model, but it's not. The reason it's important is Gemini used 0 NVIDIA chips. They did all the training on TPUs. Well, what's a TPU? A tensor processing unit. Well, why does that matter? Well, CPUs were created to process numbers and code. And they were good, and they got better as we got more transistors and Moore's law. And then GPUs came along, and they were really good at accelerating the graphics part and real engines and Unreal engines and all that kind of stuff. And then we found a way to brute force them to do what we do now, which is this processing of huge amounts of information with lots of power. Like, okay, I mean, we figured it out, and then he was a pretty good marketer. He convinced people that that's the only way to do it. And he roped you in because his software only worked with his chips. Well, now, so then this guy was working at Google, and he invented this thing called the Tensor. Well, it wasn't him. It was like 8 people. They invented a different way of processing, tensor processing units. And it turns out they're better at the things you need to do for AI, so to speak. And they use way less power, and they're cheaper. So we backed this company, Groq. Everybody knows about the Groq story. And they, one of the guys who invented the TPUs started Groq, Jonathan. And these other guys stayed at Google. One person stayed at Google, and they've built pretty interesting. Google use their own chips now. So they're going back to being vertically integrated. And then we're going to get to VPUs and LPUs and the innovation in chips. I don't want my computer to catch on fire because it's trying to process so much information. So we're going to have to find a way to get chips, and we've got a company, Neurophos, that does that. Or in-memory compute, another company we invested with. So I agree completely. Although I think Hugging Face is way too highly valued, but because it's just a repository of models. But it's a good repository of models. But it's kind of like, to me, Hugging Face is similar to what happened with the firm right down the road here in North Carolina, Red Hat. Mm-hmm. The problem is, Hugging Face went from 0 to 12 billion, where it took time for Red Hat to get to 40 billion. We'll see.
Well, I guess more on this idea of AI, are we in a bubble? Because I think if we are in crypto winter, are we in an AI bubble? Let's take a look at NVIDIA's record-breaking Q3. They post 57 billion.
So to speak, record-breaking. On paper it was. Yeah.
Yeah. So they hit that 57 mark, which was a 62% year over year, with net income also up 65% to 32 billion. And of course, Jensen is always going to be optimistic, right? And having an aggressive tone and talking about growth of the data center segment, which was 51.2 billion alone. And global demand for GPUs continues to rise. They have a stronger Q4 outlook of 65 billion in projected revenue. I think that is not going to do anything to slow down the fears of the AI bubble. Mark, what say you to some of these numbers? Because obviously the multiple is still quite vast. So obviously the revenue is one thing, but what we're looking at, what this stock is actually trading, it still is very concerning.
It is. It's the only game in town. It's Atlas with the world on his shoulders. It's Jensen in his leather jacket. So it's an amazing company. It's a wonderful company. The GPUs are a very good product. I struggle, right, with a couple things. And I think, we saw that yesterday, right? After hours on Wednesday, the stock pumped 6%, which is way more than the amount of incremental revenue or earnings. But okay, you got the multiple effect. So it pumped a huge amount and hundreds of billions of dollars. And then people kind of looked at the numbers beyond the press release and beyond Jensen's hyperbole. He said some stuff. This is great. Somebody pulled up a transcript from John Chambers at Cisco from 2000.
I love it.
Oh my God. X. I mean, it wasn't word for word, but it was so close in terms of, things like unlimited demand and we can't keep up with demand. And we all know what happened with Cisco, right? I mean, and so, but it was pretty scary. I mean, it wasn't every word the same, but it was pretty damn close. And it reminded me, actually, there was a time where I finally had the aha moment with politics. So someone had taken a clip from W's inauguration speech and a clip from Obama's inauguration speech. So you couldn't have two people who were more different, right?
Sure.
Good old boy Republican and new age Democrat. I mean, couldn't be further apart. They didn't say the same ideas. They said the same words for 6 minutes. They said the same words. So it was the same speechwriter. And there's no left and right. There's one, and they're just in power. So, but it freaked me out that they were saying the exact same words. And no one got in trouble for plagiarism, which is kind of funny. But the problem is people then dug into the numbers and said, whoa, your inventories went like this. I mean, literally, it's a parabolic move of inventories. And we've seen this movie before. Yeah. Cisco's inventories went like this. Car makers' inventories went like this. It's a thing called channel stuffing. You tell your customers they have to buy more. Okay. They can't use them. They like the car dealers can't sell the cars, but you can mark them sold. But here's the other point. But then you say, but you don't have to pay for it. So your receivables go way, way up. And I remember right before the global financial crisis, I was flying into Minnesota and I'm looking down and all the parking lots around the airport were full. I mean, full of cars with that plastic stuff over them. So that it wasn't people's cars who got on planes, right? These were cars that had been stuffed in the channel by GM and Ford to say they were sold, but they weren't. And then they almost went out of business and the government had to come in and bail them out. And I'm not saying that, well, other people have been saying it, so I don't have to say it, but that's what people are saying and look, when 36% of your sales are to 3 people and you own pieces of those people, that's weird. That's never ended well, actually. Circular financing mechanisms, and everyone's seen the meme online. And Oracle's maybe the pig in the python there that is starting to come out the wrong end. And after the pig goes through the python, it's a mess. It's a mess.
Well, Jensen's kind of quotes to kind of pull up the speech that you were talking about in real time, they kind of ran a little counter to Clem from Hugging Face, where he mentioned that the growth that he's starting to see is going to come from other areas. So data processing, ad recommendations, search, engineering are turning to GPUs because they need AI. That sounds a lot like a stronger partnership with Google and Gemini. So the idea here is that older computing infrastructure based around the CPU will transition into running newer systems on NVIDIA chips, kind of a self-fulfilling prophecy, Mark, but a little bit different from what Clem was saying, in that effectively things will become more efficient. And if you don't necessarily need to run kind of AI models for things like engineering.
Well, to your point, it's an LLM problem, right?
Right.
The GPU is okay for LLMs if you put enough of them on it. But the problem is DeepSeek, right? So I have all the models, and the one I use the most, not even close, is DeepSeek. Because it's just better. When I ask it a question, the answer is more fluid, it's more robust. It doesn't have as many hallucinations. I mean, ChatGPT has gotten better. I will give them credit. They've gotten better. And so I still use that occasionally, but I really use DeepSeek a lot. And remember what DeepSeek did is they couldn't get the chips So they wrote software to make the process better. And TPUs are kind of the same type of thing. So all of these things that, well, GPUs were designed for video, but we can make them do this. We can brute force them to do this thing with LLMs. I don't know. I actually don't believe you're going to use them for all these other applications, because CPUs still are better and cheaper and equally fast and use less power. And now TPUs are here. And then there's this whole next wave of innovation, I said, around VPUs and LPUs and all these other things. And then you go to quantum. Now the problem here is quantum actually doesn't do what it says it does yet. It's really good at factoring prime numbers, but it can't do 2 + 2. So, look at all the quantum stocks are just getting absolutely pummeled, and Shkreli is killing it. He's killing it. But anyway, what else is Jensen going to say? He's going to say everything is great and we're going to take over the world. History tells us, because again, if we pulled up the transcript from Intel in 2000, and I'm actually going to do this. I'm going to pull up the transcript from Intel. The stock was up 20-fold in the previous 10 years. Everyone said, it was the future. And now it's kind of an afterthought, begging for U.S. government assistance to try to compete with NVIDIA. My guess is NVIDIA will suffer the same fate, but we'll see. I don't know.
Yep. Well, we've come to that point in the show where we peek into the lovely world of data visually, because if a picture is worth 1,000 words, a chart is worth a heck of a lot more than
10,000 words.
Yeah, 10,000 words. Speaking of LLMs, now we spoke about earlier some of the factors that go into, what's going on between our recent slump. Can't talk about that without talking about the broader jobs market, which we kind of made an allusion to. So let's take a look at those reports and see if we can glean anything, Mark, from what has just been released. I will share my screen as per usual. Reminder listeners to check us out on YouTube for the visual chart of the week, and if we have been deepfaked or not, which is always a possibility in today's world. So I will share the screen. Let me know when that is up, Mark. So now, hopefully we can see a little bit of a trend here.
Yep.
And this, unfortunately, Mark, is not the trend that we want to see, because we are going sort of in the wrong direction here, but I'm optimistic. I know these things will be revised, although for those that are on audio only, this is showing the last few years of monthly change in jobs. And basically this month in September, there was a plus 119,000 jobs at present that have been added. And that was up from a forecast of, I believe, 50,000. So although I love the disclaimer here in these numbers, Mark says figures in this period will be revised lower, which is a bit ominous. So Mark, obviously we spoke about this impact on Bitcoin. I know that we follow this stuff. You're an old macro guy. What do you think of the latest numbers?
Yeah, so there's a couple things. Like, one is if you drew an average line through this, it would almost be a straight line around 180,000 jobs, which 180,000 jobs a month is actually not bad, right? It's particularly not bad in a world where, and I don't know the exact numbers per month, but all of my brethren and sistren, right, the boomers, 10,000 of us turn 65 every single day. So I still got a few years to go, but the working age population is shrinking in the United States, and the baby bust is real, and so there's this, you got the echo boom, which is the kids of the baby boomers, but in the middle, Gen X and Gen Y is much smaller. So it's logical to see some downward trend, particularly when you're at full employment. That's just the law of large numbers. You don't need as many new jobs if everybody's working. Now, on the far right, the big precipitous drop, people say, oh, that's Trump's fault and it's so bad. Well, part of it is garbage in, garbage out. Part of it's bad data. You know, government shutdown most recently. So how good is the data going to be on this newest report? Probably not very good, because people weren't working. And look, I do believe that we are in the part of the economic cycle, the macro cycle, where you would normally see companies shed jobs. And that's exactly what we're seeing, right? We saw the big tech companies shed jobs 2 years ago. We've seen a bunch of companies shed jobs like Verizon and others, and they're blaming AI. But I actually don't think it's AI, because the McKinsey study says most of the companies who have adopted AI really haven't seen much productivity enhancement. What it really is, geez, costs are rising because, you know, currency devaluation has gone way up in the last 5 years. And so my margins are getting squeezed. And if I'm not a hyperscaler, I don't have pricing power. So I got to do what I got to do. And I'm going to just lay off some people. And so that is normal. And if it weren't for, this is the interesting thing, if it weren't for AI data center build out, we would have negative GDP this year, or zero GDP growth. So we'd be in a recession, and these numbers would be totally normal. In fact, they'd not bad, right? Because they're still positive. So I don't get so alarmed by this. Now, it's easy for me to say because I'm not one of the people that got laid off. But I think it's a normal part of the business cycle, which is not dead. And it's a normal part of the liquidity cycle. You know, the Fed had tightened interest rates. What is that going to do? That's going to cause companies to have to refinance their debt at higher rates, and they can't afford something, so they fire some workers. So it's not surprising to see the beginning of those bad numbers be right at the time where interest rates had peaked. Now, the Fed did start to cut this year. They didn't really cut a lot. And now they're saying they might not cut in December. So I'm not a doomsayer like some who are like, all the jobs are going to get replaced and it's going to be all agentic AI and there are going to be no human workers. And it's like, look, Elon, sometimes he says stuff that's so cogent and smart. And other times he says stuff that's like, really? Like the other day, pretty soon, and I think he gave a date, like 2040 maybe. I shouldn't say it. What he gave a date. Everyone's going to be wealthy. No one's going to have to work, and everyone's going to be wealthy. Like that's an antithetical statement. The only way you create wealth is through work. You can't have everybody idle and have the agents, okay, connecting with each other and sending money that you print to people and have that be wealth. Now, I guess maybe I'm being too old school. And if what he's saying is the cars will get produced by robots and we'll just ride around them and we'll pay to use them, and that generates GDP. Okay. I mean, I see no evidence that robots can actually produce. I mean, robots do a lot, but there's still a lot of humans involved in car production. There's still a lot of humans involved in computer production. So I guess maybe, maybe I'm too old for X.
I guess we'll close on that point, Mark, and maybe give a spotlight to some U.S. companies that are employing lots of people. So Walmart, 1.6 million employees. Amazon, 1.1 million employees. UPS, which I think is a little bit of harbinger of what's to come, over 400,000 employees. Target, 427,000. And my favorite place, which I will guarantee during Thanksgiving break, I will go to at least once, Home Depot. 418,000 employees, Mark. So, I think we're at 4.4%. And hopefully, we can close the year out strong, and that might mean better things for Bitcoin, but we'll probably
to that point, X,
Yeah.
Every technological innovation, doomsayers have said it's going to destroy all the jobs, right? Mm-hmm. You know, when the automobile came along, they were worried that all the street sweepers were going to lose their jobs. They did, but they found new ones. And, you know, when, you know, the Industrial Revolution came along and, workers, manual labor is going to lose their jobs. They did. And machines did some of the work. And a lot of jobs will get destroyed by these new tools. But the fact is today, despite all the technological innovation that was going to kill all the jobs, we have more jobs today than any time in human history. Like, who would have thought, you know, being a podcaster was a job, or being a gamer, an esports gamer? Like, 80,000 people go to stadiums to watch people play games. It's kind of cool. It's a form of entertainment. I mean, we do it every Saturday with football. I mean, you and I are going to watch a bunch of boys running around the football field tomorrow. And so why is it any different watching people play a video game? It's not. So, and maybe we do get to a point where there's more entertainment and art. You know, maybe we go back to the Renaissance, where things are beautiful again. And we have people who spend their whole life building a set of doors on the Duomo in Italy. And we get back to a place where it's not just about sitting in an office cubicle, pushing paper and crunching numbers. Geez, I would kind of like that. I mean, I'm so tired of seeing every single car is white, black, silver, or gray, that Chick-fil-A got rid of the red, the McDonald's is brown. I don't want homogeneity. I want to go back to beauty and artistry and people making things. That would be awesome. So maybe we're going to have a cultural rebirth. And yeah, we're not going to be drudgery laborers dressed in our black overalls going to, you know, punch a clock or sit at a computer screen all day and have your eyes, you know, bleed out. Maybe we're going to have some artists and some musicians and some, AI can do all that too. Kinda, maybe, we'll see.
Love it. Well, we will probably record early next week to try to get out an episode for those on Thanksgiving. And we'll remind our listeners, as always, to rate, review, and subscribe. Mark, I'm glad to be back. My favorite part of the week is doing the show. Thanks for everybody tuning in and listening. And as always, stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.